Good morning, everybody. Hey, welcome to this Wednesday. This is the last day of August. And hey, we start the third month of the third quarter, September tomorrow. And I know everybody's ready for Labor Day and to have a little bit of downtime. So glad you're able to join us today. Hey, we'll talk about what's happening in the marketplace coming up next with Dave.
Morning, Dave here. It's 8:41:19 before 9. Time to check in on your money and see how Wall Street is abusing your retirement funds. Phillip Statler is on the line from Statler Financial Services in downtown Sebring. And Phillip, I think Jay Paulson really needs to do another one of those take-a-pill speeches and reassure the world that he's not suddenly turned into the not-so-jolly green giant, because things are looking like we might see an even bigger interest rate increase this coming month than we wanted, looking at the reports we got in, right?
You know, I'm telling you, I'm looking at the overall reports that came in yesterday, and there's it's one of those things that you and I talk about. Good news is bad news, and everything was good. Consumer confidence was up. You know, there's more job openings available. Not that many more people quit their jobs. And so there's nothing, I mean, other than this morning, and we'll talk about ADP, that was a slight miss, but you know, there's just too much good news out there, which makes me concerned that the Fed will end up raising interest rates more than we anticipated. I mean, we expected 0.75%, but if we keep getting this good news over and over again, I wouldn't be surprised if the Fed starts looking at a 1% increase.
Yeah, absolutely. And what I guess you can give credit or blame, depending upon how you look at it, to Janet Yellen, because when she was the president of the Federal Reserve, she was the one that started including the JOLTS report, the hiring and resignation indexes, as part of their reading on the economy. And Tuesday's JOLTS report, we had an unexpected uptick in the number of open jobs. The quit rate fell to a 14-month low, so the Great Resignation is slowing down. And you know, in a vacuum, you'd call this all good news for the economy. But as you say, with an overheated, or at the very least very darned healthy employment picture, that's exactly what the Federal Reserve wants to slow down. And that speech that Paulson gave at the end of the Jackson Hole retreat last week, there will be pain. And the problem is, you add in consumer confidence, that number from yesterday afternoon, we aren't feeling any pain yet. Jay, hit us again a little harder, right?
That seems to be what the economy is saying, Dave. I mean, the consumer confidence was about 8 points higher than what it was in July, and that's even better than what was expected. So we continue to see that. Job openings are up by almost 10% over not over last month, but over what was expected. They came in at 11 million last month. They're 11.2 this month. The expectation was they were only 10.3 million. So about 10%, almost 10% more than what was expected when it comes to job openings.
Well, I know why consumer confidence went up. They only surveyed people with student loans. Okay, I had to put some levity into this thing, because good news is bad news on the stock market. We started the morning out. Mortgage applications down again last week. They were down 1.2% last week, or the week before. Last week they were down another 3.7%. The mortgage rates are starting to scare people, and the ones that are applying are generally the ones that are looking for utilizing their equity in their current home and making great big down payments, because housing prices at the very least around here haven't fallen much yet, but the number of new mortgages being written is pretty small. Then we come to the ADP number, because we're coming up on the first of the month, and we always get those big numbers in for employment. That's the one miss we got this morning. They expected 300,000 new private sector jobs in the economy. The big payroll service says there were only 132,000 created last month, and that's, bad news is good news, and that's bad news, so it might help the marketplace, right?
Maybe. I mean, that's a possibility. We'll have to kind of wait and see. I mean, that was, but I mean, we get the non-farm payrolls on Friday, and there's been several times that there's a big mismatch there between what ADP says and what the government non-farm payroll number comes out to be. So Friday will be the true tell.
Absolutely. It helps to keep in the back of the mind ADP is almost always wrong on the numbers, but the absolute numbers aren't half as relevant as the direction. And if we're looking at a miss on the private sector by that quantity, I got to assume we're going to probably have some sort of a miss on the gross non-farm payroll number. We get to the point, all of that put together, yesterday's data resulted in another drop. The Dow was down another 308 points yesterday. That's almost a full percent. Standard & Poor's down more than a full percent, down 44. And the NASDAQ was down 1.12%, down another 130 and another 134 and a half. It was kind of having my fingers crossed that we'd seen 32,000 on the Dow for the last time for a while, but we're down to 31,790 now, and I'm not seeing a lot of green ink this morning either, although there is a little bit of rebound going on.
Well, there is a little bit, but it's just a tinge, and we started out with the tinge yesterday and see what happened. So, I don't know there's any more numbers to come out this today, though, that could affect the marketplace. The only thing that's coming out later is going to be the Chicago manufacturers PMI number. So I don't think that'll move the market one way or another when it comes out. But still, we continue to look at the indexes, and they're just really suffering in August after a great July.
Absolutely. And we're not starting out with a lot of good news kind of coming under our tidbits column either. One of the companies that has a store here in town, Bed Bath & Beyond, announced early this morning that in response to all the problems they're having, they're laying off 20% of their staff and expect store closing announcements coming soon. Let's keep our fingers that the Sebring location is not on the store closing list. We'll find that out as time goes on.
Well, that's right. And so they're also picked up another $500 million, it looks like, in new financing. But I got to tell you, they are getting slammed today. They were down 9.3% yesterday. Right now, they're down another 30.1%, $8.46 a share right now. Hey, they're still not even, they're double almost what their low is. Their low is $4.38, and we're not there yet.
Well, thank heavens for small favors anyway. Yeah, the market tends to get real antsy when you start talking about store closings and layoffs because everybody keeps remembering Sears, Penny's, Kmart. Every time a brick and mortar store starts making those noises, everybody starts having nightmare scenarios go through their mind. And while it probably isn't in that direction for Bed Bath & Beyond, that's kind of the first crack in the armor that tends to make investors really nervous.
Well, yeah, I mean, the other thing they started to do, I mean, they got a new commitment for $500 million in financing, but they also filed with the SEC to be able to sell additional shares of common stock. So, so that's why the stock's really tanking, because that will further dilute the price per share of the common stock.
Can $4 be far away? Huh?
Exactly.
Kind of gets there. Earnings season is pretty well toward the end, but we got a couple of household names that reported this morning, and one of them is my cat's favorite store, Chewy.com. How are they doing? Am I buying enough Fancy Feast?
No, you need to buy a little bit more, Dave. They had a good quarter, though. They surprised with a profit for the last quarter, but sales were lagging. As prices rise and consumers focus more on, pet food and medications, that it's an issue. So they made a better than expected profit, but they're getting killed this morning because they cut their full year outlook. And so, yeah, Chewy's down almost 11% this morning.
Geez, I mean, she's 18 years old. My cat can't eat anymore. Somebody else chip in.
Oh, me. Yeah. So we got a couple of retailers reported. Designer Brands, which is a footwear accessory retailer, they had better than expected profit and revenue for this last quarter, and they came out and raised their full year guidance. So Designer Brands doing well. They're up 3.3% this morning. The other retailer I have is kind of maybe the other spectrum is Express. They're trading down this morning. They missed on revenue. They cut their full year guidance. They're expecting a pretty dismal quarter. They're down 4% this morning. and let's just put it out there. They're a pretty inexpensive stock. You want to go buy some, Dave, but you might can do it. It's only right now $1.84 a share.
Ooh, I could buy a few shares of that. I think I got a 20 in my pocket. I can be a major stockholder.
It's almost becoming a penny stock.
Getting there. Did you mention Hewlett Packard had come out?
I do. I have both Hewlett Packards, HP Inc., which let's see here, and then you have Hewlett Packard Enterprises, which deals with more IT and consulting and that kind of stuff. So HP Inc., they came in as expected for their earnings, but they missed on revenue. And they're the ones that make the computers. They're the computer manufacturing side. They're seeing that slowdown, right, in spending, and so they're down 6% this morning. And then HP Enterprises, they're the more consulting IT experts. They said that they had an okay time this last quarter. They're trading down though about 1/3%.
Okay, doesn't help that much, does it?
It doesn't at all.
Resetting the table the morning. It was an off day yesterday on Wall Street because of good news economically. Like the Fed says, we're not doing monetary policy based on the stock market. Thanks, guys. Where are we going 45 minutes early this morning?
All right, man, I'm gonna have to fumble around here just a little bit because the website's not working, but the app is. So we've got the futures right now. The Dow is up $61, almost 0.2%. S&P 500 is up 18, which is almost 0.5%. The NASDAQ 100 up $111, which is almost 0.9%. So things are looking okay there. Let's see if I can get the commodities. Here we go. Commodities. We've got silver trading down 1/3%, down below $18, Dave, down to $17.92 an ounce. Gold trading down 0.75%, a little bit more, down to $1,721. And then we've got crude oil. Man, you gotta like this, Dave. Get excited, man. Down 2.3%, down below 90, $89.53 a barrel.
I'm not 100% sure what caused that because except for just expectations of a slower economy, right?
Yeah, I don't either because everything I saw. So OPEC Plus might be actually cutting production. So that's counterintuitive to what that number's showing us.
Yeah, that was on my tidbit list too. So I'm not complaining about the result, but I don't know what the reasons are. Overseas markets, the Chinese and Japanese, Asian rim stocks all down this morning at the close at 6 a.m. Europe is looking at our futures and saying, "Where's the excitement level?" They're all down as well. British stocks are down by 1.2%, as a matter of fact, on that index midway through their day. Getting advice to stabilize and remove the risk from one's retirement portfolio during volatile times like that is invaluable. How do I find you to get that advice, Phillip?
You know, Dave, when we look at where we are, and that's one of the reasons we developed the core retirement design to help people figure out how much risk they truly have in their current portfolio. It's a big miss I see almost every day. Give us a call at 863-382-0037 to schedule your core retirement design. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730, 95.3 FM.
And back here again tomorrow morning. Phillip, thank you so much. We'll see you then, okay?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I continue to hope that you have a great week. Excited about Labor Day, getting a little bit of downtime. Hey, with that, I hope you'll join me again tomorrow morning, same time, same place. Until then, have a great day.